Hey, students of iMarkets Live! The following Crypto Academy video is designed to help you understand trending markets and identify what the story of the candlesticks is telling you by being able to see where in the market cycle we are at. Trading contains substantial risk. By watching this video, you agree to the terms within this disclaimer and accept full responsibility for any of your investments. This lesson will focus on answering the following questions. Before we continue, pause the video, read through them, and be certain to minimize any distractions. When we think about common characteristics that are taught for identifying if we are in a bullish, bearish, or sideways consolidating market environment. Generally, during that accumulation phase where the market is ascending, creating higher highs and higher lows, we are in what is called a uptrend. When the market is descending, creating lower highs and moving lower and lower over time, we see the supply being distributed back into the market, which is going to cause price to move lower regardless of the asset that you're looking at. So with cryptocurrencies, if we're in a bullish market environment, we will be seeing buyers driving the price higher, whether that's due to news or hype, awareness, adoption. The individual projects for cryptocurrency can experience some very clear bullish market environments when we look at the charts. Same thing can be said for the bearish side. When we see investors that are taking profit and deciding to sell off their cryptocurrency, which results in that downtrend, the key is being able to recognize where we are at in the cycle. The market environment is always changing. And even if we're in a sideways trading range with no clear direction, there is an underlying narrative that plays out on every single chart you could look at. And we're going to go ahead and explore that further because it is a concept that I am very certain you're aware of. What is the first thing that pops in your mind when you think about this? In the beginning, we have the status quo, the norm, what people think and believe to be true, reality, in a sense. And once something happens, something significant changes, when you look at the narrative that is in front of you right now, what is the first thing that comes to mind? Maybe it's a book that you've read or a movie. Having a clear beginning, middle, and end. This structure causes an emotional response inside human beings because it is a logical, step by step process of telling a story. In the beginning, we have the norm, the status quo, and then something happens and it's building up and building up this anticipation until we reach that point where we've had so much suspense, so much emotion, which results in this completely new way of looking at things. Now, the reason why this structure works and this structure is so relevant is because think about our emotions. We feel a certain way in the beginning when we're coming into a trade and we want to make a decision. Once we commit to taking action, we're in anticipation. Is our trade going to hit the target? Are we going to get stopped out? How long am I going to have to wait in order for this to move in the anticipated direction? And once we see results manifesting And the buildup of all of that emotion can result in you taking action that will not benefit you if price goes the opposite way. Because beyond movies and novels, this narrative is applicable in the markets. And we're going to take a look at that together right now. USD CAD. We're looking at the 15-minute time frame on this Forex currency pair right now. And I believe that the narrative that we see in the market plays out time and time again. Sometimes the story is completed within days, sometimes it takes months. But regardless, when we look at the market and we start to understand the underlying intention of what the institutions and professionals that have large portfolios and the power behind them to move the price, it becomes a little bit easier to understand that the narrative is identical to that of any book that you could read, any movie that you could watch. Because in the beginning, we have consolidation. The status quo that lasts for hours, days, sometimes minutes. And then something happens. We break out of that range. And even if we get a retracement, a little pullback from the anticipated direction for the next day, we can see that the institutions are committed to the goal of bringing retail investors into the market, making individuals believe that price is going to continue to rise. And then once we get the retest of that same high, that additional confirmation, we have effectively created the high for this day. So everything that happened between this line and this line, these white lines separate the days. So we had the status quo that was broken in day one. In day two, the institutions were committed to the goal of making as many people as possible believe price is going up. And then on day three, they confirmed the potential of price to rise. And then they brought the price all the way down below the previous status quo. They broke the level. And then right in here, at this moment, it's so significant because the fake out that occurred, it renewed the optimism of any buyers who bought in up here at 1.303, of buyers that bought in here and here and here and even down here. Price went in their favor, 30, 40, 50 pips if they bought in on this retracement. Price maybe brought you back to break even if you were sitting in this trade waiting and waiting for days and your target had exceeded the high of this story. But then when we get that distribution, the rapid falling action, and a new status quo is created, time and time again, this structure occurs, and you're going to be able to identify it. You're going to be able to find yourself looking at the market in a completely different way, considering what would you do if you were the individual on the other side of the trade, the institution that was moving the price, the investor that wanted to get your money. What would you do? What would you show on the story of the candlesticks that cannot be altered? There is no modification that can be made to this data after it has been printed. And so once a new status quo is created, that's when we can transition into the next phase of the movement. And what's fascinating with this story and how it plays out, when we think about where price goes, whether we're looking at the micro or we're looking at the macro on some of the larger time frames, it's very clear that price will experience significant reactions when there is an imbalance of supply or demand for a particular asset. And this isn't just something that you'll see in Forex. This is something where when you really start to be open minded about how this narrative can play out, there are many different ways that you will look at the market. And over time, as you practice and get better and better, you're going to find yourself looking at the market in a way where you've back tested a specific asset, you become in tune with that market environment, and you can look at where price is today and say, okay, I am within the accumulation phase. We're consolidating right now. Or we're in the midst of rising action. We're building up and I'm awaiting that solid confirmation to enter my position, whether I'm buying or selling for a short term or long term investment. You're going to be able to identify we're currently experiencing that rapid falling action. Prices transitioning to a point where we're no longer going to be in that past area of structure. We've now moved into a place where price is going to set a new status quo, and we could see it consolidate in an area higher or lower than it has been before. And when you're looking at the markets, understand that areas of consolidation, this is considered attractive. To investors because it seems indecisive. And then once something happens and we start breaking out of that consolidation, making higher highs and higher lows, we're uptrending. During the retracement that we get after that initial rise, all of this is retracement that we get after that initial rise, all of this is considered to be the best possible time to re-enter for those individuals that are looking for movement to the upside. And then once we fail to break the level and we retest it once again, the investors that know there is a high likelihood that the price is actually going to go down based off of the confirmations that they have, that is when we see the supply be redistributed back into the market and we effectively see a new status quo, creating a new trading range, some sideways action until the price decides to go and continue in that direction. Anything that you do in the markets is going to be based off of probabilities and speculative scenarios. And the most important thing that you can do is develop positive habits for yourself that are going to reaffirm your belief that you, as a trader, have a team and we're on this journey together. And this is something that once you find yourself looking at the market in a way where you can identify the same cycle happening day after day on any given asset in its own unique way, that is when your entire paradigm will change and you will find yourself looking at the market and within moments being able to say, we're in the accumulation phase, we're consolidating, we're uptrending right now, we're in a bullish market environment, we're in a bearish market environment, which is going to allow you to effectively enter your trades and sustain those periods of drawdown because you know that even if price doesn't go your way, you've planned for that. And if you get stopped out, all that you'll need to do is reevaluate. But as you get better at identifying where in the story price is at, that is when you're going to find yourself taking positions before the intended movement happens. In summary, identifying low risk, high reward, high probability trades before the move happens is possible if you continue to practice developing a patient and calm trading attitude. With time, you will find yourself looking at a chart, even if it's for the very first time. And after some thought put into your analysis, you'll be able to identify where in the cycle we're at and make an effective decision based off of that. Be sure to leverage the resources made available to you, and the most important thing is to stay plugged in. As you implement the information, ask questions and remain open minded, because all trading requires is persistence, discipline, and acceptance that you can and will learn this skill set.